Okay, so here's something to think about. AI might be reshaping jobs, but it turns out the messiest parts of work are still very much human territory. And
That's a fascinating way to put it. And it's just one of the stories we're unpacking today.
welcome to DeActa Daily Digest. I'm Joseph.
And I'm Juniper. Here are today's top stories.
First up, we're diving into a groundbreaking look at how AI is changing the workplace, but not in the way you might think. Then, we'll shift gears, literally, to explore a new Lexus model that's all about balancing sportiness and refinement. Finally, we'll break down some troubling signals from the labor market that might have broader implications than they seem.
Let's start with AI and work. This first story is based on a book called Messy Jobs, The Work That AI Cannot Reach by Luis Garicano, Jin Lee, and Yanhui Wu. It takes a task-based approach to understanding what parts of work AI can handle and what parts it can't.
What's so compelling about this is how they reframe jobs. Instead of thinking of a job as one atomic role, they break it down into tasks. Some tasks are routine and easy to automate, while others are what they call messy. These messy tasks require judgment, trust, or discretion, things that machines struggle to replicate.
And they introduce this idea of an autonomy threshold. Below that threshold, AI is a tool that helps humans do their jobs better. But once AI crosses that threshold, when it can perform at or above the level of a competent professional, the dynamics shift. Humans who can't outperform the machine become replaceable.
That's where it gets really interesting. They argue that AI won't just hollow out jobs across the board. Instead, it will create more inequality within professions. For example, in fields like accounting, AI might handle routine tasks like reconciling numbers. But the parts that require interpretation, legal accountability, or managing relationships, those are the messy parts that humans will still need to do.
And even there, AI might assist by flagging edge cases or exceptions, which could allow smaller teams of experts to handle what used to require larger staffs. It's a double-edged sword. On one hand, AI could democratize access to expertise, making services like legal advice or design more affordable. On the other hand, it could concentrate rewards among a smaller group of high-skill individuals.
That's the superstar economy they talk about. The idea is that top performers, those who bring something unique that AI can't replicate, will see their value rise. Meanwhile, routine performers might find their roles diminished or eliminated. It's not just about which jobs survive, but how the rewards are distributed within those jobs.
And it's not just knowledge work. They point out that some of the most resilient roles are in skilled trades. Nurses, electricians, and others that combine cognitive skill with trust and accountability. These jobs are inherently messy and less susceptible to full automation.
It's a fascinating framework for thinking about the future of work. But as they note, surviving automation doesn't mean the benefits will be evenly distributed. Societies will need to reassess how they reward judgment, trust, and skill rather than relying on traditional credentials.
That's a huge cultural shift. And it's one that will take time, especially as we start to see these dynamics play out in real-world labor markets. Speaking of which, let's pivot to the second story, July's payroll numbers. This one paints a much less optimistic picture, doesn't it?
It does. The Bureau of Labor Statistics reported a decline of 23,000 jobs in July, which was a huge miss compared to the expected gain of 83,000. On top of that, they revised May and June's numbers downward by a combined 103,000 jobs. So it's not just a one-month blip. It's part of a broader trend.
And what's striking is how much of this decline comes from specific sectors. Leisure and hospitality, which had been buoyed by the World Cup, lost 40,000 jobs as that temporary hiring surge reversed. But the losses weren't confined to hospitality. Local government education shed 50,000 jobs, retail lost 19,000, and even healthcare added fewer jobs than usual.
Yeah, healthcare added just 22,000 jobs, which is below its 12-month average. Manufacturing and construction also posted modest gains, but they weren't enough to offset the losses elsewhere. And then there's the issue of labor force participation. It fell to 61.4%, the lowest level in 5 years.
That's a worrying signal. A falling participation rate, especially alongside a declining unemployment rate, often means people are leaving the workforce entirely. They're not finding jobs. They're giving up on the search. It weakens the labor market in ways that the headline unemployment figure doesn't capture.
And wage growth was muted too. Average hourly earnings rose by just 0.02 in July, pulling year-over-year growth down to 3.2%. That's the slowest pace since May 2021. It suggests workers have less bargaining power, which isn't what you'd expect in a tight labor market.
The article makes the point that one bad report doesn't necessarily mean we're heading for a recession. But when you combine the payroll miss, the downward revisions, the end of World Cup hiring, and the drop in participation, it does paint a picture of a cooling labor market.
For investors, the takeaway seems to be caution. The stock market might be doing well, but the underlying jobs data suggests a softer economy. Companies with strong cash flow and durable pricing power are likely to weather this better than those relying on momentum.
It's a reminder that markets and the real economy don't always move in sync. And it underscores the importance of looking beyond headline numbers to understand what's really happening.
Speaking of looking beyond the surface, our third topic is the 2026 Lexus IS 350. This one's a bit of a palate cleanser, a sporty compact luxury sedan that's trying to strike a balance between performance and refinement.
Lexus has simplified the IS lineup for 2026, offering just one model, the IS 350, in two F Sport trims. It's powered by a naturally aspirated 3.5-liter V6 that produces 311 horsepower. It's not the most powerful car in its class, but it's smooth and composed, which fits Lexus's brand.
The F Sport trim adds some sporty touches like 19-inch wheels, red brake calipers, and a firmer suspension. It's nimble enough to be fun on winding roads, but still comfortable for daily driving. That balance is what Lexus seems to be going for.
The interior reflects that balance too. It's a mix of sporty and luxurious, with synthetic leather, soft touch materials, and a 12.3-inch infotainment display. The F Sport models add heated front seats and a heated steering wheel, which are nice touches.
But it's not without its drawbacks. The trunk is small, at just 10.8 cubic feet, and some features you'd expect at this price point, like cooled seats or driver's seat memory, are missing. It also requires premium fuel for peak performance, which could be a downside for some buyers.
True, but for those who prioritize styling and driving dynamics, the IS 350 has a lot to offer. It's not trying to outdo the BMW 3 Series or the Genesis G70 in every metric. Instead, it's carving out its own niche, a sporty, refined sedan that stays true to Lexus's core values.
It's a solid choice for buyers who want something predictable and well-rounded without the gimmicks. And in a way, that ties back to our earlier discussions. Whether it's AI reshaping work or labor markets showing signs of strain, there's something reassuring about a car that knows exactly what it wants to be.
That's a great way to put it. It's a reminder that even in a world of constant change, some things like the joy of a well-made car remain timeless.
On that note, let's wrap up. Today we explored how AI is reshaping the nature of work, the signals of a cooling labor market, and the enduring appeal of a finely tuned luxury sedan. Each of these stories offers a glimpse into the challenges and opportunities of our time.
And they remind us that progress isn't always linear. Whether it's adapting to new technologies, navigating economic shifts, or finding joy in the familiar, the journey is as important as the destination.
Well said. Until next time, take care and stay curious.
Take care.